So I think it's time again, 2 months later after my October update of my CPF investing portfolios, be it in Money Owl or Endowers, I think it's time to give a result of what my whole year investing with my CPF portfolio has been. And to give a very too long didn't read answer, it has been pretty horrible or terrible, because you see now the S&P 500 index is at 3,844 points, which means it has dropped by around 20% year to date. So you see, with the stock market decline and S&P 500 index even plummeting, those who have not invested their CPF portfolios this year would have made better returns because they could have earned 2.5% in the OA interest alone. And this is not even accounting for those people who could have used their CPF OA to invest in T-bills, because the recent T-bill just gave 4.28% per annum. Now, even if you are not an investor, you have not put any money invested in the market, you will have made better returns than us, because a 0% return is better than a 20% negative return. So on a hindsight bias, am I stupid to invest in the market this year? Hell yes. So for those people who are suffering huge losses in your investment portfolio, be it in CPF or your cash investments, do know that I'm also with you. I am suffering too, either in my CPF portfolios or my cash portfolio as well. But just to recap a bit on my CPF investment strategy, I do adopt a dollar cost average approach, which means that every month I will put $2,000 into CPF investing. Half of it, $1,000, will be in Endowers, and the other half of $1,000 will be in Money Owl, because they are investing into two different products. And just for those who are interested in investing with their CPF OA, you do need to have at least $20,000 in your CPF ordinary account before you can make any investments. That is the same as your T-bill. Anything above 20,000, then you can use to take it out. And the transaction charges, if you are using UOB Kay Hian, that will be $2 plus GST per transaction. So next year the GST is increased to 8%, right? So that will be $2.16. And then every quarter CPF will also charge you a quarterly fee, which is $2 plus GST as well. So you pay this 4 times every year. And then since I have 2 portfolios with Endowers and Money Owl, I will pay 2 times the quarterly charges as well. But you see, even investing with CPF, you will be having all these passive charges even if you did not make any transaction. So I show you my Endowers portfolio. Okay, here is my Endowers dashboard, and you can see the investment value right now is 37k, but that is inclusive of my SRS portfolio, so I won't go through the SRS portfolio because the purpose of this video is on my CPF portfolio. And right over here you can see my CPF S&P 500 Honey Money portfolio invested with my CPF OA funds. The investment value is currently at $25,000, and currently I'm suffering an unrealized loss of 2.8k, which represents 10%. So if you actually look at what do I investing in, why did I actually lose 10%, then you can see that this is actually a FundSmart portfolio with a 100% equity portion. But you see, for my Endowers portfolio, I only invest in one thing. Okay, I don't invest in their default portfolio, which is the Lion Global Infinity US S&P 500 Stock Index Fund. I know that's a mouthful, but I've been saying this for the past 1 or 2 years soon. And you see, this is the current portfolio that I invested in, 100%. All in the S&P 500, just to look at the current performance, and I'm just going to filter for my CPF S&P 500. I have already invested close to 30k and I'm losing 2.8k. And if you just look at this chart, right, last year was very smooth sailing for me. Like 2021 April, I started this portfolio. Okay, quite stable. Year end, 2022 suddenly all go into shambles, you know. Suddenly all the news come out, all the negativity and the bear market and the interest rates and the inflation, all these were affecting my portfolio and the global markets as well. So I am definitely not spared. Even though I'm dollar cost averaging into S&P 500, you can see that my time weighted return all time has already dipped at close to -6%. Just this year alone, my unrealized losses is close to 20% already. This is mirroring the S&P 500 index, and you see just 1 month it has dropped 6.7%. Okay, December has been a really sad month for all those investors because since December, the market has just been falling. So if you want to look at what the S&P 500 index hold, you can take a look at this top 10 holdings, which is mainly Apple, Microsoft, Amazon, and Tesla. Okay, and also Alphabet as well. Now, personally, I feel Tesla is going to go much down on the list because Tesla has fallen so much, right? But this is not a Tesla video discussion, so I'll avoid from that. But if you really do want to use use your CPF to invest, then at least you must know of the management fees, right? What are the fund level fees? And this is the fund level fees charged by Endowus and Lion Global right now. Lion Global is charging you 0.61%, net cashback 0.28%, returned by Endowus. So your net fund level fee is at 0.34%. So for my portfolio is FundSmart, right, which is a single fund. So they will charge a 0.3% annual access fee. So you add that up, it's 0.34% plus 0.3%, total 0.64%. And of course, if you do want to sign up for Endowus, you can use my referral link down below, because you get like $20 off your Endowus fee. That can help you offset some of these charges charged by Endowus. So if you really do want to use Endowus to invest, then remember, use my referral link. Alright, so that's for my Endowus portfolio. Next up, I'll show you my Money Owl portfolio, which is investing in a different product compared to what I had in Endowus. Next up, let's take a look at Money Owl, right? So for Money Owl, you can see that I only started this portfolio since the mid of this year. So you see my CPF portfolio, there's only one thing as well. Okay, because I opted for the 100% equity portfolio, and right now my unrealized losses is at negative 2.5%. So you see, it's not too bad, right? That's because I only started investing since June, and since June the market has already fallen quite a bit since the start of the year. So I guess it's not as bad as people think, but you see, the thing about Money Owl is that they don't have a very sophisticated or advanced portfolio. It's only just giving you the unrealized gain and unrealized loss in numbers, simple returns. Okay, so I invested a total of $8,000. $8,000 right now, I'm still losing $200. Okay, this is after the June dip. You know, I started investing in this since the middle of June, and you see, what am I investing in is the Lion Global Infinity Global Stock Index Class C SGD at an NAV of 0.84 cents. That is the present value as of today's date. And if you want to take a look at the asset allocation for this Infinity Global Stock Index Fund, it's still primarily in IT, which is tech, and then financials, healthcare, and all that stuff. Mainly your US equities as well, because US is the largest proportion out of this, other than Japan, UK, France, Canada, all the developed economies. And of course, if you want to sign up for Money Owl, you can use my referral link as well, because you get $20 of GrabFood voucher. Not only you can use it to invest, you can use it to buy insurance, you can use it to do your financial planning as well. So Money Owl is like a one-stop bionic robo-advisor platform. So you see, both my Endowus and Money Owl portfolios were not doing very well. In fact, they have been negative returns since I invested. But I'm curious, right, how many of you are still positive when you are investing in this kind of robo-advisors? Because these past 2 years have been quite a fake bull run, right? All to be wiped out in 2022's bear market. So comment down below, how are your individual portfolios coming up in year 2022 year end? And if you're curious about how my previous CPF portfolio did 2 months ago, then you may refer to my prior video right here.